Welcome to Avoidance Talk. Today's topic is a very popular topic about the difference between tax avoidance and tax evasion. But before I start, let me wear more formal clothing. Tax evasion is a subset of tax fraud. What's involved in tax fraud is when companies purposely change the information they lodge on their tax return or change the company name in order to avoid taxation or attempt to defraud the government from its rightful revenue. So what sort of things are involved in tax evasion? Concealment and underpayment of revenue forms part of tax evasion. Other parts of tax evasion involve not working or cooperating with the taxation body of the countries, such as the FTA in the UAE. Tax evasion also involves falsifying or using incorrect receipts in your tax returns. Also, a term that's popular with tax evasion is an artificial separation, whereby companies will separate into multiple entities in order to minimize the tax paid to the government. So what economies face the largest amount of tax evasion? People will be surprised that some of the largest tax evasion economies are the USA, Brazil, Italy, Japan, Germany, France, Spain. These economies face large amounts of tax evasion, partly because of the high taxes that's being levied over there, and partly because of the systematic fraud that taxpayers use in these economies. It's surprising because these are developed countries and established countries when it comes to taxation. So now that we've covered tax evasion, let's talk about tax avoidance. Tax avoidance is using legal methods in order to reduce taxation. These tax avoidance methodologies can be utilized in VAT as well as income and corporate taxations. So why should companies avoid tax evasion? Well, firstly, tax evasion causes large amount of reputational cost to companies. Customers and stakeholders do not want to deal with companies that are involved in tax evasion. Furthermore, tax authorities will levy large amount of penalties on companies that are involved in tax evasion. These include imprisonment and large monetary penalties. What are the reasons for governments to crack down on tax evasion? The answer is quite simple. First of all, tax evasion causes drastic loss of revenues for government. Secondly, it causes corruption. It causes reputational loss for the economy. It causes money laundering. And of course, it causes great social inequality amongst the various taxpayers. It's a very thin line between tax evasion and tax avoidance. Now that we've covered the difference between the two, I strongly recommend you engage a company like Avoidance Group, the leading tax agency in the UAE and Saudi Arabia, in order to discuss your tax position and ensure that you have correct methodology in order to reduce the taxation paid. Remember, when it comes to taxation, the onus of proof is on the taxpayer, not the government. The taxpayer needs to prove that he's innocent. And therefore, it's very important to keep appropriate records, appropriate documentation, and engage professionals in order to ensure that your tax position is clear. And remember, we will take care of your business. We are Avoidance Group.